Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, April 10th at about 1:30 p.m. Eastern. Well, today traders kept bets that the Federal Reserve will leave interest rates on hold through the end of 2026 after the Labor Department reported this morning that consumer prices surged in March, as we expected they would. They continue to see about a 1 in 3 chance of a rate cut by the Fed's December meeting based on pricing and interest rate futures contracts traded at the CME Group. That's the Chicago Mercantile Exchange. So on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, see this little red candle right here? When I captured this chart today, the SPY was trading at $679.44, gapping up on news the last couple of days of a potential ceasefire in Iran. And it is right now, this price where we are right now at 679 is about 3% below the all-time highs that we set back here in January. And that came back, the all-time highs back then were at $697. So at the moment, the red line, the SPY is trading above the 20-day moving average, the red line, which is coming in at about 658. The green line is the 50-day moving average coming in at about 674, and the 200-day moving average is coming in at 664 and change. Now, we can't see it on this chart, of course, but a year ago, we had an April low. Kind of funny, we're having another April low right now. But anyway, we had an April low a year ago, and that was for the SPY. It came in at 481, and ever since that 481 low a year ago, the SPY has been pretty much walking up the red line, the 20-day moving average, pretty much, except we had this little dip here, kind of a sign of exhaustion because the SPY had been climbing all that time up to these October all-time highs. It hit that in this past October at 690. So from that low at 481 up to this high at 690, it was a 44% gain. So whenever you're looking at something in the market that's made a 44% gain in relatively short period of time, you've got to know that profit taking is going to come in. So after that high up here, we had a little dip before it happened, a kind of a warning dip. Then up here we had this high at 690, then it came back down and retested those lows. So it fell down to 652 here in November, gained energy again, pushed higher up here to 689. Then gradually in January made higher highs here and rose up to 696, 697 at the end of the year and into January and February. And then it started kind of trading in a range here for a short period of time between 676 and 697. But you could tell, you see how the 20-day moving average was headed lower here at toward the end or the beginning of February. 50 days still moving up, but the 20 days starting to roll over a little. And you can see right here that price is getting tired. Profit taking is coming in from some places. When it came up here the second time and couldn't go any higher, that means that buyers put their hands in their pockets and said, we're not buying anymore right now. So price started to weaken. And then, of course, it came in here into February, getting a little more tired. You can tell by now it's trading below the 50-day moving average and unable to get back over it. Then all of a sudden we got the news on the war in Iran, and it fell all the way down here to this year's April lows, down to 629 on the SPY. And all the way down. Then it rebounded very, very quickly. to where we are now, and even gapped up a couple of days ago, of course, on that news, and gapped up to where we are now at 679 and, or I'm sorry, 679 and change. Now, price is pausing today. We have this little red candle. We can see from the news that negotiations with Iran may be stalling here, and a lot of traders, actually myself included, probably are taking some profits before the weekend. We are looking forward to what could be another very volatile week, and it's certainly going to affect the stock market. We have potential resistance up here at 693 if we're looking for some places to kind of draw lines and get the feel of what's going on. So we've got potential resistance is again at 693, and of course all the way up to 697. We have potential support at the 200-day moving average down here at 664. We could count the 50-day right here, but if this starts to fall, we do have a gap here. You may know as a new trader, you've heard that all gaps get filled. Sometimes it takes a long time to fill a gap, but you could say, generally speaking, that if you looked at a chart for a long term, you would see that most gaps, especially this big, do get filled. We just don't know exactly when, certainly not in the world we're in right now. So we have, again, this potential support at the 200-day moving average at 664. Then a little lower, we've got 658 at the 20-day moving average. So potential support all the way down. Please do know that on top of everything else we're doing right now, we're heading into first quarter earnings season next week, and banks will start announcing. Wells Fargo and JP Morgan are actually announcing earnings before the opening bell on Tuesday, and many other banks are reporting in the coming week. Also reporting next week, Netflix is announcing after the close on Thursday. So that ought to be exciting. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund that closely follows our NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including the large cap momentum stocks like the Magnificent Seven, that whole group. Now, when I captured this chart today, the Qs were trading at $609.76. That's about 5% below the all-time highs touched here in October and in January at 637. So the Qs are now, as you can see, speaking of gaps, the Qs are trading back above the 20-day moving average. Right now, the 20-day right here is coming in at 588 and change. The green line, the 50-day, is coming in at $600 and change. And the black line is coming in, the 200-day moving average, I should say, is coming in at 596. So we can't see it on this screen, of course, but a year ago, the Qs had an April low like everybody else. And the April low for the Qs back then a year ago was 402. We had the same kind of all fall down motion that we did just recently. So the April low back in a year ago was 402. And from there, the Qs did much like the SPY. It rallied up and walked up its 20-day moving average to this October high in 637. And that was a 58% rally. From those April lows last year to this October high is a 58% rally. And that is pretty darn good. So from the highs here at 637, and you can see that the same thing happened with the SPY. We had this one hard dip here that said, all right, this trend's getting tired. So it came up here in the October highs, then it dove back down and pretty much retested that low, and it dove down to 585 in November, then rallied up to 628 in December, and then started sidestepping and consolidating, kind of like the the SPY did during this same time period. Started going sideways, moved back up, popped up to 636 in January, pretty much retesting that high in October. Then it couldn't do it anymore. Profit taking came in. The Qs fell down to 594 down here. Said, all right, I can do this, moved back up. But look how these moving averages that were support are now resistance. And they're pretty tough dudes, so you have to respect these moving averages depending on which side price is trading on. So it rallied up, tried to get over and couldn't, did the same thing again, tried to the end of February, tried to do it again, could not get over the 50-day, and then could not do it. And then, of course, news of the war came in, and so price, the Qs fell down to a March low down here of 555, then turned around and rallied hard, as you know, all the way up here. Did this big gap 3 days ago, big price gap here, gapped up really high 3 days ago, this past week, and came back up here to where we are now at 609 and change. So right now you say, well, okay, we're right here. This is 609. We have price resistance coming in overhead here. We have price resistance coming in at 617. Potential up to 628 is potential more price resistance here. And then, of course, on up to 636, 637. So that's what it's got to fight against. It has to get over all of this potential resistance here to keep going higher, which I'm sure it can do if we have. It can always happen if we have enough buyers, right? Okay, we do have down here potential support. We have potential support at the 50-day and 200-day moving averages coming in here at 596 and 600. So that's potential support. And of course, we've got this gap here, and that gap may have to be filled now. We'll have to see. We've got the gap. Then we're down here to 585. Remember that low back there? That can offer potential support. So we have potential support there. And then, of course, on down to the lows here at 555. So at the moment, I'm mostly on the sidelines. I told you all that I would not be trading until we got a ceasefire. Well, we got that ceasefire. So I've been dabbling a little here and there. I'll talk about it in a minute. But I'm not going in full on until we get a little more positive news. Because we've had a bull market, made good money. Why give it back unless I have to, right? Okay. Our final chart today is a daily chart of the Global X Hydrogen ETF, symbol HYDR. It has 25 holdings in it. We've traded this quite a long time ago, I think. I'm looking at it again for several reasons. So the symbol is HYDR. It has 25 holdings in it. Some of the top holdings of this ETF is Bloom Energy, Plug Power, I love Plug Power lately, Ballard Power Systems, Fuel Cell, and ITM Power, some of the top holdings. Now, when I captured this chart today, the HYDR was trading at $39.70. It is now above its 20-day, the red line moving average, which is coming in at $37.81, and its 50-day, the green line, which is just right there on top. So that's just 38 and change. And the 200-day moving average is down here at $34 and change. Now, I looked at a long-term chart, as I always do. You can't see the long-term chart on this screen. But if you do look at a long-time chart, I look at monthly charts, you can see that in 2021, the HYDR made an all-time high at $155. So you look at this now and you say, hey, Toni, this is really boring. Well, yeah, it is right now. I agree with you because all the other, many other industry groups in the market have gained all the attention. Hydrogen hasn't been it, but it's been trucking along. It's holding up. It's not falling like a rock like some. It's not gaining crazy like others, but it's kind of a place, I will say, to hang out if that's something you want to do. So let's look at this. Again, in a long-term chart in 2021, the HYDR was trading at $155, right? And then it slowly edged down to, yes, it's April 2025 low, which you can't see on this chart, all the way down to $15. Okay, that was a year ago in 2025, April 2025. So we're catching up with it here on this chart, which is back in September of 2025. And you can see that, yes, it does have the power to move quickly and decisively as it did back here. From 15, we're catching up with it here again in September last year, rising dramatically, spiked up here dramatically, ran right up in September and October up to these October highs on the hydrogen, on the HYDR. It spiked up to $48, then it pulled back down here to $37, pretty dramatic, then ran up and retested these highs again. Love how highs like to retest. Then rolled over. So pulled back to 37, went back up to 48, then finally fell down, couldn't hold up, down through its moving averages again, and then traded along, kind of drifting lower here to a low of 31. And actually, if you look, back here in November, it fell to about 31 too. So it's kind of retesting this low here. Pulled back to 31. I'm getting these. Pulled back, then fell to December low of 31, then rallied up here to the high in 41, and then started consolidating along these moving averages, along the 50-day and the 20-day, kind of walking along here right around 36, 37, sideways over the 50 and 20-day moving average, dropped back down here to the, right here at 34, down here, dropped down here to 34, I got too many numbers lined up here, down to the 200-day moving average. And note how this acted as support, this 200-day moving average. So these moving averages can be worthwhile for sure, especially for checking out certain points. Then it came back up here and stepped back up here to where it is now at 39.70. So when I'm looking at hydrogen, what I'm seeing here is that it's not reacting very much to the Iranian war, and it's certainly not tangled up in AI. So those, if you need to be in the market or want to be in the market in the next week, and it could be very hairy out there, this is one place you could kind of look and kind of hang out if it's something you want to check. In the coming week, if the HYDR can stay above $36, and $36 is right down here. Next, in the coming week, if the HYDR can stay above $36, I will buy a small position in my trading portfolio. I'm going to put in my initial stop down here at 33.75. Now, if you want to make it tighter, of course, that's up to you, because I don't know that this is going to be a trading vehicle. It's going to be more of a long-term hold, as long as it behaves and does the right thing. So if in the coming week, again, it can stay above 36, I will buy a small position with a stop at 33.75. If and when the HYDR can break above 42 and hopefully close above it 2 or 3 times, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to put the HYDR on your watch list. Now, checking back in with a couple of things we talked about before. It's been 2 weeks since we've talked. We talked about the XME ETF, the metals ETF. It's hanging in there and still on my watch list. It's actually looking pretty good. We also talked at that time a couple of weeks ago that I was watching the XLU utilities, and that thing flew. That thing flew. And I'm keeping an eye on the SLVR, the Sprott Silver Miners ETF. That one looks like it could do well again. So, and of course, about 3 weeks ago, we were talking about the IGV, the software ETF, because it was down pretty dramatically. Well, you ain't seen nothing yet. It got really hammered in the past few days over cyber fears, and I was stopped out at 80. I didn't have a loss, and I'm just letting that one go for now. I think that overall we're going to have, again, a lot more volatility ahead next week with all that's going on, so I'm certainly taking it a day at a time. And now please know that at ToniTurner.com we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. With all this going on, you can take some time and learn something so that you'll be ready to make money when things smooth out a little bit. That's how I'm looking at it. If you look at these different programs here, you'll see how to bottom fish like a pro. That is the perfect training to check out right now. In this program, I show you exactly how to detect with high probability a stock or an ETF that's just about ready to reverse from a downtrend and move higher again. You'll learn how and when to buy, how to manage the trade, and when to take profits. Our new low price for this program is only $199, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading to how to swing trades successfully, one of our most popular programs, how to trade the trend to profits, how to read charts, great for novices, anybody who wants to brush up, 3 winning setups, great short-term trades, trading setups, and how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. And know that these 2 right here, these are only $59 each, okay? So be sure to check out these programs by going to the link on this screen or simply check on the orange button below. So please be careful out there. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.